We're talking today with Steve Prominence, who is both the CEO and Managing Director of Lake Resources, ASX code LKE. Steve, you recently announced that your technology partner, Leilac Solutions, will have an earn-in position, if you like, after contributing the technology, the engineering teams and a demonstration plant out at your Kachi lithium brine project in Argentina. They will also have make a $50 million investment into that Kachi project. And for this, they'll gain a 25% equity share in the Kachi lithium brine project. Now, significantly, Leilac have also announced its backers recently. It's raised circa $150 million US, of which 50 million will be allocated to Lake. Can you talk about your JV partner and who has significantly backed this JV partner just recently?
Yes, certainly. So as you all know, they've been following the Lake story. We've had a partnership for Leilac for some years. And as the debt financing that we recently announced progresses, there was a need to have a very fulsome agreement, not just something a few pages, but 50 pages long for the debt providers. And so we've been talking to Leilac about how best to put that together. Furthermore, this year, the equity markets have opened up. We've been able to source the debt markets for our project. The access to off-takers has improved because they're scrabbling to get supply. But we keep getting questions around the technology. So what better way than have the technology provider stump up with their own money and say, hey, we're not saying it's going to work. We're going to put our own money here and demonstrate that to work. And moreover, rather than just putting up front and still having questions, does it work at scale? Is it the right quality? You get them to earn in progressively, demonstrate the entire market that the demonstration plant produces 2.5 tons at a very high quality specification, and then you get the proof of that with your off-taker. Then they go and put their money in. Essentially, you significantly de-risk the project. So it's a good outcome. Okay, then the backers themselves, this money isn't coming from the mining sector, the resources sector, the energy sector. Those backers, as that money flows through Leilac, are successful investors who've made huge sums of money by disrupting sectors. And one of the leads has been Breakthrough Energy Ventures. That's headed up by Bill Gates with money from people like Jeff Bezos, even Andrew Forrest has put money into that. They have gone again to support this. And then on top of that, Chris Sacca with his new lower carbon capital fund has come in. Now, Chris Sacca used to run the most successful venture capital fund in Silicon Valley ever. 250 times return. They invested early into Uber, into Instagram, into Twitter, into Kickstarter, and their very first investment is into Leilac coming to Lake. So that should give investors a pretty good idea of where this thing is going.
Now, Steve, to be honest, you've got some significant backers, but the deal struck with Leilac looks quite dilutive at the asset level. However, our analysts kind of suggest this dilution is compensated by an increased likelihood of development. Can you elaborate more on this?
Yes, absolutely. One of the things that we have tried to do progressively is de-risk the project. So the reason we went to export credit agencies, for example, is to de-risk the debt funding long-term, de-risk the perceived risk of Argentina. The equity markets have opened, and now with Leilac, we should be able to deliver on that. But of course, it doesn't matter who we sign up with. And let's say we signed up with a battery maker. How do you ascribe a certain amount of value to their seal of approval? We could do this on a 100% basis. But by having Leilac involved and putting their money behind what is perceived as the risk issue in the project, it makes investors realize that this project's happening. So you create greater value in Lake and in the asset itself. And by announcing that now and in the near term, we actually bring that value forward. Because as many of your listeners know, we're still a long way off our peers, for example, Standard Lithium, They're trading in Aussie dollar terms at 1.3 billion for 30% of their project using direct extraction. So we've got a bit of catch up from $500 million where we are at the moment to that. And so this is a way of continuing to de-risk it, demonstrating to the market this is happening, and then through that supporting the expansion case.
Now, Steve, I suppose the next question is that post having a tech partner fully aligned in Lilac Solutions, how do you intend to further finance the Kachi project into production?
Okay, so Lilac will step up with about 50 million of the 150, 160 million that we'll need in equity. Then with the bonus option transaction that we announced in August, that comes due middle of October. So by the end of October, we reasonably expect to have a cash balance in the order of somewhere between 60 to 80 million Aussie. So let's say that's another US 50, 55. Then with the attached 1-for-1 75-cent bonus options that come due in June next year, if they're in the money, then that delivers another 70, 75 million Aussie, so it's financed. If for some reason that didn't occur, all we're missing is the last third of the equity of around $50. And given that it'll be significantly de-risked by that time, I don't think that'll be a hard ask.
Now, Steve, I suppose the next question is, as far as securing an offtake agreement, now your risk profile has declined noticeably in the last month. You've secured an early debt funding arrangement with the Export Credit Agency of Britain and secured obviously your tech partner at the asset level. You must be in a better position to secure a tier one offtaker. Can you give us a bit more colour on that?
Yeah, so the short answer to that is absolutely. So we've been in discussions for a while, but all of your viewers would know that the lithium price has recently gone up just in the last 3 to 4 weeks. So it's moved from a relatively tight range around $11,000 to $13,500 a tonne for premium hydroxide and carbonate. That recently has lifted to a range between $17,000 and $21,000 a tonne. We want to get the right sort of commercial terms with the rise and fall mechanism. So it's going to take a little while to establish those. But suffice to say, when offtakers see that we really don't need their money, we just need their commitment, and we can deliver an ESG product that they want and a high quality product that they want, we're in a pretty good position to secure that. It's just that it's lucky we didn't sign one up a few months back.
Now, Steve, ultimately, we are talking about putting lithium in an electric vehicle battery in what will be an environmentally friendly form of transport. And I suppose what investors need to know also is that the car manufacturers are looking at every input into that battery chain. What will the end product look like for Lake Resources?
With Lake, together with Lilac, we're producing a high purity product. That's what battery makers want. That delivers a high margin, makes it a robust project. What the electric vehicle makers want is security of supply, and one with a low carbon footprint and better social outcomes. And we have a low land use, low water usage, better social outcomes. They're the sorts of things that they want to see in their supply chain. Through this technology, we can deliver that. We're going through the process of actually defining all of that data under greenhouse gas emissions, the amount of renewables we use, water usage, so that we can come out to the market with that and have that signed off by somebody respected. But that's really what we're doing. And the fact that now this tech money is supporting that is proof positive, saying, hey, this is what we want to see. That's not going to the lithium sector. That's going to the lithium sector that has got a climate tech green outcome. That's why that money is coming to us. And in the same way, those export credit agencies want to be involved in this space. And if you've got an ESG benefit, then they feel much more comfortable with it. So that's why this project is basically financed, and we're using a method that is scalable. And with the size of demand that's coming, we need to produce somewhere between 8 times and 18 times more lithium in the next 10 years than we did last year. And we're not going to get there unless we use something like this new technology that's scalable and can actually deliver that end product. So that's what Lake's going to do. If you think about our expansion into, say, 50,000 tonnes per annum, that's going to put us in the top 5 producers. Our nearest neighbour, Livent, is producing 16,000 tonnes per annum. They have a $4.5 billion US market valuation. You look at Orocobre, They've got a 4 billion market valuation. We're going to be through 50,000 tonnes per annum before they are, but with a higher margin, a higher purity, and with an ESG outcome. So there's plenty to go in this.